Yeah.
Anyways, hey Raunak, hi. Welcome to Finsire's podcast. We've been doing this for a while now. Raunak and I also know each other for a while now, so thought this probably is less of a podcast, more of a conversation,
Yeah.
and so be it, right? So
Yeah.
Raunak,
Yeah. Yeah.
good to have you. Would love to sort of you inform our viewers who are you, uh, and where do you work, and what does Decentro do all about it, right?
Sure. 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 Thanks, buddy. Yeah, it's a pleasure to be doing this with you, man. And wish you and Team Finsire the best for the podcast. I really hope you guys kill it on this one. So, coming to me, my name is Raunak. I basically am part of the founding team of Decentro. Decentro is a fintech infrastructure player. We basically help, and I would say fintech and lending infrastructure players. So we help a lot of companies across the financial uh, services landscape with a ton of services or solutions like KYC. We are an RBI licensed payment aggregator, so we help people move money. So that is collecting money, settling it to their merchants. We are involved in debt collections as well. So essentially, as Decentro, the idea is for us to build infrastructure and services that companies can use to build their products and go to the market without having to worry of how are they going to build these solutions, how is it going to power their product, and how are they essentially going to have the back-end integrations that they need with banks and other financial institutions. So essentially all you have to do is come to Decentro. We've got all of these solutions ready for you to plug and play, go integrate into your product, and then go to the market. So that's essentially what we do. Yeah, at Decentro we've been doing this for about a little over 4 years, based out of Bangalore. We are a team of about 75 members at the moment. Yeah, and we
Very
are
cool.
on the cusp of acquiring our 1000th customer as we speak. So yeah, that's about us.
Wow, wow, very cool. 1,000. That's
Yeah.
crazy. Even before all of this, there are a lot of like these flashy terminologies like infrastructure,
Hmm.
back-end integration, so on and so forth, right? Like,
Yeah.
how did you even
Yeah.
stumble upon something like a Decentro in your career to begin with, right? Because you could have done probably anything in your life. What made you sort of think that, hey, I would probably get into fintech, or even more so, post getting into fintech, something
Yeah.
of doing into like some infrastructure or API play.
Sure. Sure. So I think there are two parts to this answer. So the first part is, of course, me personally being interested in fintech. About this, I think it started way back in the year 2014 or 2013, when I actually first got a glimpse of online payments, or actually a couple of years before that as well. So it was very fascinating to me how you could sit on your laptop and you could make payments through your debit card or credit card, and how money would move from your bank account to the merchant's bank account. And something about that really interested me, and that's stuck on, right? It's been more than 10 years now, and it still fascinates me to this date. So I think fintech was a natural course of course for me to take, because it's so exciting, even for me, in on this date as well, because there's so much innovation that's happening. There's so much that you could do, and kind of bring value to people, and that's very exciting for us. Coming specifically to why Decentro excited me, I've personally been impacted by the difficult integrations that banking integrations entail, right? Essentially, when I was in my first year of my career, we were working on launching a multi-currency forex prepaid card that would enable people like you and me to pay abroad when we travel.
Sure.
So essentially, what you had to do to launch this was go ahead and find a bank who would give you a bin. So that is called the bin sponsor. So essentially, any card-based program, you need the bin. So only banks have bins. So you need to go to the bank and get the bin sponsored by them. And this was in the year 2015-16, when companies that exist today building this infrastructure were not in the market, right? So we had to go and do all of this ourselves. So it meant that we had to integrate with a bank. We had to find a bank first to kind of sponsor us on this program. We had to integrate with the network. So we had to choose between a Visa or a MasterCard. Then you needed to find a processor to process these payments, because these are international payments
Yeah.
involving multiple currencies. So you needed to find the processor, then you needed to find the card manufacturer, and it didn't come bundled with the bank.
Sure.
And there were a few other players as well involved with this whole process, and we had no idea how difficult this integration was, or forget the integration, right? How difficult it would have been to launch this product before we got into it.
True.
Honestly speaking, we were very optimistic when we got in, and then we realized 6 months in that, oh, you know what, our timelines are not going to be met,
Sure.
because initially we thought ki 6 mahine mein ho jayega. Then we realized that okay, it's going to take us 9 months to 1 year, and we were prepared for that. We ended up going down, and every small thing takes so much time. Shreyans, it's very difficult as an early stage company, because you don't have infinite amount of money that you could spend on resources. You don't really have the luxury to keep building without having revenue flowing in the systems, right? So there's only
True.
limited runway, and we had to end up canning that whole project because it never kind of saw the light of day. So because of these experiences that I had been through and I'd seen myself, we realized that there is a need for a company to come in and simplify these bank integrations. Then when Rohit told me that, oh, you know what, we're planning to build Decentro, and this is what we're planning to do in terms of banking integrations, it immediately struck a chord with me, because I've personally experienced the pains of having to launch a product. And I was like, yeah, this makes sense. I think this is needed in the market. Let's do it. And
Nice.
yeah, that's how it all happened.
Very good. So you joined Decentro, I suppose, in 2020, if I'm not
Yes.
wrong.
Yeah.
And
Yeah.
by then, India had already seen a wave of KYCs because they had come in, say, 2016. Some form of payments, we've been pretty good in IMPS and UPI,
Yeah. Yeah.
was pretty much already in action. Uh, what did sort of strike the chord? Let's talk about your first set of products at Decent. I assume
Mm-hmm.
it would have been somewhere around KYC, right?
Yes.
What is
Yeah.
so special about the KYC that existed in India, and what did Decentro pick up to essentially sort of ride on the wave to help sort of other companies take on KYC?
Oh, okay, sure. So I think when you put yourself back in 2020, right? There were two things. The first was obviously, look, we were just coming out of COVID, or we were in the middle of the COVID pandemic. So earlier, what used to happen, especially with legacy financial institutions, was agar KYC karna hota hai, so you go to the customer and you collect documents, you get them to sign, or the customer would take these documents and go to the branch and submit it. And probably not really 2020, but a little before that, KYC used to work this way. I remember this one incident where I was opening up my demat account with one of the most prominent companies in the market today. The gentleman who had come to collect my documents literally came to town hall because I was there to attend some function, and I had to carry the documents with me to this place in Bangalore. He came there, we collected it, and then he said, "Arey, we need another document." And I was like, "Dude, okay, you got to come tomorrow, right?" So that was how KYC used to happen back in the day. So we realized that getting into banking, getting into financial services, you have to touch KYC. There's no avoiding it. And we needed to build digital rails to be able to enable companies to do KYC. So I think because KYC is so intertwined with banking, it was a natural extension for us to build KYC as well. Back in the day, when we were looking at what do we do, we realized that, okay, you know what, we honestly, our KYC stack started with 5 documents that we were helping you to verify. As of today, I believe my KYC stack has 64 different APIs, right?
Uh,
And that was where we started with very humble beginnings. So we started with Aadhaar, PAN, voter's ID, driving license, and GST. These are the 5 documents that we were helping you to verify. That's
sure.
pretty much it, right?
Sure.
So it was interesting because that was it, that was enough. So what we realized there was a need in the market at that time was, you did all of the people who had KYC were dependent on probably one partner. So we wanted to help them add redundancy layers to it. So we had multiple partners who we integrated with in the backend for each of these services. So the decentral layer, as long as it's up and running, even if one provider is down, we were able to hit a secondary provider and get you what you needed.
Got it.
that helped us to really launch the product, go to the market, acquire customers, and then we realized that over 1 year, 2 years, we realized, okay, great, you know what, this was good for 0 to 1,
Yeah.
but we need to do something different now. If you're going to go to a legacy institution and say that, hey, I've got these rails, but I'm also connecting to multiple providers in the back end, that argument did not fly well with them. It worked well for an early stage startup. And I remember pitching the solution to you back in the day when you were just about to launch Finsire.
Yeah.
Uh, but yeah, I mean, when we very quickly realized that, okay, you know what, we need to own the entire stack end to
Yeah.
end. And that's when we started upon this journey of building all of these blocks ourselves and retain the providers we had connected to as a fallback. So
Got it.
if at all, anytime Decentro layer is down, we would fall back on these layers. But we need to build our own. So that's when we started this journey. And I think it's over the last 2.5 years, we've ended up building so many proprietary APIs. And it gives me immense pleasure to tell you this. And I can confidently tell you that at least with a couple of products, we have the best stack when it comes to KYC in India.
Got it.
And to give you a little bit of context, DigiLocker is one of our standout hero products by a long way. And we've really worked on DigiLocker like no one else has. There are a couple of other solutions as well, which we are just about to launch. But this is how we've been able to differentiate ourselves from the market as of today.
Got it. Got it. So when you
Yeah.
say that, and I do realize, let's go back even before December, how KYCs exist, say in India, how KYCs exist overseas, completely different. I think India's KYC stack
Right.
happens to be probably top notch, right? Let's talk about how even this KYC layer in India was built, right? Like who is on the back end? I assume that there are many KYC players and there are many KYC norms, right? VKYC, CKYC, so on and so
Yeah.
forth. And we're going to discuss about that as well. But let's talk about just the simple KYC norms that exist in India that is given by the government for individuals and not for businesses yet, right? We're going to touch upon
Yes.
that
Yes.
later.
Yes. Yeah.
For individuals, how is it even built? What is the backend stack? On what rails do we sit upon? So on and so forth.
Yeah, actually, this is a question that I really, really love to answer because as an Indian, it gives me immense pride to say that, we've got such a fantastic infrastructure that we are able to ride upon. So essentially, I mean, let's take it all back, right? We've always had a fragmentation of multiple documents. If you were to look at the individuals or the citizens who would live in a tier 1, tier 2 setup, you would most likely find a driving license with them. You would most likely find a voter's ID card with them. You would find probably a passport. And these are all documents issued by different agencies. Like, for example, a driving license would have been issued by the state RTO. Passport was issued centrally. Voter's ID was, again, it varies depending on the region you're in. And then if you were to go into tier 3, 4, 5, you would probably find a voter's card there. You would find a ration card.
Yeah.
So there are it's different contours to KYC.
Sure.
In 2010, 11, when Aadhaar came out, that was probably a groundbreaking or a watershed moment in helping companies to, or basically, let's take a step back, right? It was a watershed moment in giving a unique identity number to every Indian. Now, that meant that this system had all the data that you needed in terms of identity and address. And they had the vision to say that, okay, you know what, we are going to allow companies to come in and access this data and verify it. And there was a way for you to go and give a number. There was a way for you to verify it with an OTP. So there was consent built into it. There was authenticity built into it. So I think that literally set off a lot of chain reaction, which today we're able to literally take the benefits of in the market.
So basically, you're saying that these companies used to verify it with the central repository of Aadhaar, if I'm not wrong, correct?
Yeah, so Aadhaar, so what happened was first Aadhaar came out and everybody literally had their Aadhaar cards and there was the number written in plain text. Like sabko pata tha ki yaar 1, 2, 3, 4, 5, 6, that 12-digit Aadhaar number, everybody was there.
Yeah.
But then people were able to send an OTP, or companies were able to trigger that OTP to be able to verify it and pull the information straight from UIDAI, which was a game changer.
Yeah.
Whereas earlier what used to happen was you used to take a photocopy. Now, if somebody was really smart, they could fudge that information. You had no way to verify it, right?
True.
So this authenticity, because you're pulling data directly from the source through a consent mechanism, was, I believe, the biggest game changer.
Got it.
And everything else has been built on top of that.
Got it. Got it.
Yeah.
And so that the initial layer of KYC is built, but I assume there are many more KYCs that were sort of brought up by the government, by different financial institutions to basically sort of adhere to their own compliance norms that they have.
Yes.
Right.
Yeah.
Let's talk about the plethora of KYCs that exist today. Right. There is a KYC, there is a CKYC, there is a VKYC, there is an EKYC. What is the differentiation amongst each of them? And what is the order of, hey, you're the top most number one KYC and the most important KYC now in India today, versus say in that order that exists?
Oh, sure. So I think I'll answer this question, but I'll kind of be conscious to keep it to a broad base, so that it's applicable to most people.
Sure.
Let's quickly give you the lay of the land, right? So like you very rightly said, there's a KYC. Now, what can we define KYC as? Typically, if somebody is without context, know your customer.
No, sure.
Now, know your customer typically means what is the identity of this customer of yours? Where do they stay? And do you have a unique document that belongs to them? So that's essentially KYC there. So this could mean you pick up any document. And what used to happen was there's a term which gets typically thrown around the industry a lot, which is OVD, which is original document seen and verified, or original verified document. Or there's another term, OSV, right? Original seen and verified.
Sure.
So essentially what they used to do is, acha, PAN card ka copy ye hai, you look at the card physically, you're like, theek hai, this is correct. You got the photocopy of that, you've got the self-attested signature, you're good to go. Then what ended up happening was this whole body called CERSAI was created, where they said, let's build a central repository of all KYC documents that regulated entities pick up of their customers.
Sure.
So you know what a relationship is, right? So essentially every time you go and, let's say, open up a savings account with a bank, there's a relationship number that the bank assigns to you, because that user could have multiple products that they consume from the bank. So there could be multiple loan IDs, there could be multiple savings accounts, there could be multiple credit cards. However, the relationship number of that customer stays the same.
Sure.
So every time you do the KYC of a new relationship, the thought process was, let us all consolidate the documents that we collect into a central repository so that other institutions can access this information when they're onboarding that user without having to repeat the same process of the document collection every time.
True.
So think of it as, in layman's terms, the Google Drive that connects all regulated entities, whether it is a bank, whether it's a lender, whether it is a broker, whether it's an AMC, multiple regulated entities were going and putting their documents there.
Got it.
So that was a game changer, because it was giving you access to a huge amount of data, because for every single customer you had probably an Aadhaar, you had a PAN, you had a photocopy of the passport, or a passport size photo, or a selfie, you had the signature. So all of that was there, and it basically added a layer of verification. Right? You are like able to see, okay, I've got copy A from the user, and I'm able to see the same copy A on CERSAI. So you know that another regulated entity has used this KYC data.
Got it.
Then came along in the wealth space the whole KRA piece as well, right? Where anybody who's participating in the capital markets, anybody who's doing anything around mutual funds, needs to get access to the KRA, where again they have data of all the investors.
What does KRA stand for, though?
The KRA is actually, I think, KYC Registration Authority. Not very sure.
Got it.
We might have to check this.
Sure.
Yeah. But yeah, so I think this entity basically is connecting all companies who are playing in the wealth management space.
Interesting.
And you have multiple companies acting as KRA. So you have Carvi, you have CAMS, you have NSDL, you have NDML, so CVL. So all of these guys are KRAs, and they're holding data of the consumers.
Got it. Very nice.
Then there is video KYC, right? Which is what I think COVID spurred.
Interesting.
wherein people said, okay, you know what, I cannot send my person to the house of the consumer to verify their documents, so I need a way to do it digitally without having presence.
Sure.
So video KYC is a very colloquial term. We all use it every day. Actually, the term is VSIP, right? I think
Yeah.
Video Customer Identity Process.
Interesting.
So that is where you just use the medium of a video call to connect with the user, and then you do the same thing that OSV collection agent would have done,
Yeah.
saying, okay, show me your Aadhaar card, please, and show me your PAN card, and can you show me your face? Can you answer questions about, okay, what's your name, what's your date of birth, what's your address, what's your father's name, so on and so forth, and then you verify it, and then there would be a maker. So assume that I'm the agent and Shreyans, you're applying for a credit card, so I interview you. There is a third party auditor
Yep.
who's part of the same company that I work for, but sitting in a different location, who is also concurrently auditing this. So they essentially check that I have done all of the checks in the right manner, and I'm not, favoring you, or I'm doing my job right.
Got it.
And then once the maker uploads it, the checker checks it. Once the checker approves it, your video KYC is done.
Interesting. So there is So there is a layer of maker and checker even in something as sort of straightforward as KYC, right?
Yes.
Interesting. So and I'm curious, what would be like, because you don't go in real time to visit the person, or you don't go check it like in paper format or so on and so forth. I assume the cost implications of it would have been drastic, right? Pre the digital KYC norms, what would be like the rough sort of thought process on all of these KYCs that exist, on how the cost would have been reduced drastically pre the whole KYC era that exists in India and post KYC era that sort of exists now, in terms of just pure cost and time that has been saved?
Sure. So I think, look, whenever there is a human resource involved, there are a lot of associated costs that come with it. So if I were to kind of put a rough ballpark estimate of what the cost would be for a person to come and visit you, I would peg it anywhere in the range of 125 rupees to 150 rupees, roughly.
Got it.
That's because you've got to take care of the person's time.
Sure.
They've only got enough time in a day to do probably 15 visits or so. Conveyance, travel, all the other associated costs of document handling and digitizing of those documents.
Sure.
So I would put it roughly, in my estimation, would be around the 150 मान लो कि इतना है. When we started taking digital KYC, that cost has now come down below, even like I would say $15, $20 max.
Wow.
Depending on how many checks you do, you're like doing multiple checks, cross-checking, all of that. It's not more than that.
Wow, that's insane.
Right. Exactly.
That's insane. And so I'm curious now. So now we have done, or sort of the cool part is the individual's KYCs have been kind of solved and sorted, right? But I assume that KYCs of businesses, when you have to cross-verify GSTs, you have to cross-verify sort of their shop that they hold, so on and so forth. How is that as an opportunity? Is that solved? Because I see that a lot of those kind of KYCs, the MSME KYCs, still seem in somewhat a huge, large opportunity, or things that is not solved, right? So what is your thought on something like that?
So I think, it's a very pertinent question, and I think you're absolutely right when you say this entire MSME KYC piece has not been solved. The reason it's not been solved is because it's the documents are quite complex and different in nature, and it's not there. When you look at Aadhaar, it's been built ground up, keeping in mind that there's an India stack and we have to make it accessible for people. But ROC or MCA never thought about, there will be people who will want to verify this data. So that's the fundamental difference, right? So if you were to look at any of these, let's take a example of, let's say I want to run a cafe. So I first have to have a food security license, FSSAI. I need to have a local corporation thing that, oh, I have labor, I have people working in the cafe, so I need to employ them, and there's a shops and establishment check or shops and establishment license that you need to get from the local municipality.
Hmm.
Then there is GST, of course.
Yep.
Nobody can escape taxes, right? So
True.
you've got to pay tax for all the value that you add.
That's true.
And then if this is, let's say I'm doing it as a passion project, I would probably want to do it as a partnership. So let's say you and I are running the cafe, Shreyan, so
Hmm.
probably it would be a partnership or an LLP.
Sure.
If we were to scale this up, it would probably then become a private limited company,
Naturally.
right? So there are these plethora of documents.
Hmm.
Then came along Udyam,
Hmm.
where the like, acha, Udyog Aadhar, if somebody is doing some sort of a business, ki theek hai yaar, uska Aadhar hoga, Udyam. So now the beauty about this is GST has become, at least since it's a newer platform, it's become easier to verify.
Hmm.
But a lot of the older um, documents are difficult to really verify.
Hmm.
There's also a lot of fragmentation because each of these documents or licenses are issued by local bodies.
Hmm.
However, now there's a lot of activity in the market around Udyam. So
Got it.
finally, what's happening is Udyam is becoming what Aadhaar became for individuals,
Interesting.
and MSMEs are now able to get access to credit because they are able to apply for an Udyam. The application process is fairly simple. It takes you one day, you get the Udyam. Along with that, one other document, and you're good to go and get an MSME loan. So actually, if you look at it, KYC and Udyam is contributing to financial inclusion of MSMEs in India.
Nice.
And just imagine the potential, because there are lakhs and crores of small businesses operating in India who deserve credit, but they're not able to get credit because their entities are not being able to be underwritten. So it's getting listed as a personal loan, but now they're able to get access to working capital loans. So the
Very
rate
cool.
of interest changes, the underwriting changes, the risk calculations changes, and they're able to get access. They're able to get working capital and build their business.
That's
Yeah.
pretty cool, actually. Something which is very interesting, right? So when we started the company, we were also asked to sort of file the Udyam certificate, so on and so
Right.
forth. I'm curious, is the Udyam certificate the same across all the states? That's one, because I assume that would sort of ease out the process for heck a lot of stuff. But I assume
Yeah.
the whole risk appetite for for underwriting, when it goes to say something, a use case like an underwriting, so on and so forth, would still lie because businesses generally have higher risks as compared to say what individuals have, right? Like in India, so on and so forth. What else is required to improve the KYC norms for businesses? Because I still believe when we still opened the business, there were a lot of papers and documents that we had to sign physically rather than
Yeah.
doing it digitally, right? Where does business KYC as a norm become a lot more simplified in India as the user KYC was simplified?
So I think there are a lot of nuances to this, right? So it's like an onion. The more layers you peel, the more you discover, and simultaneously you cry a lot more.
Sure.
So essentially, I think when you kind of get to the bottom of it, you realize that there are a lot of challenges that you face. Number one, entities are used as vehicles to move money around,
Hmm.
to either inflate income, to hide income. So there's a um, lot of activities that can be done using companies which you need to be able to determine and identify, right? So when, as a lender, you're looking at verifying the identity of one company, it's not just limited to that one company.
Sure.
There are proprietors, there are directors. These directors could be directors of other companies. So
Hmm.
there are related party companies, there are sister concerns, there are transactions between the two which get reported
Naturally.
sometimes as sales, which should not be done in some cases.
Sure.
There are instances of past directors being on the company who are not there anymore.
True.
Um, I mean, you have to look if they're a politically exposed party. Is there any sort of AML or CFT
Hmm.
uh, checks that you need to do against these directors? Um, the company changes hands, so it's not as straightforward as, oh, mera Aadhaar hai, it's only my Aadhaar will only belong to me until I die, right?
Sure.
but my sin
Yeah.
can change.
True.
I mean, maybe my company gets acquired, maybe there's a majority investment of somebody that comes in.
Mhm.
There's actually a ton of factors,
True.
which is where the complexity all starts essentially.
Got it.
If tomorrow we are able to build a layer from ground up to say that, okay, you know what, we are now going to be able to digitize these identity documents for companies and entities, make it consent driven, because then you need to have one registered mobile number,
Sure.
figure out who's that one POC, because if there's a company with 5 directors,
Multiple
who
directions.
do you decide, right?
True. True.
So all of these challenges need to be, I would say, rationalized.
Sure.
You need to really sit down with a pen and paper and figure out what is exactly the best flow that we need,
Hmm.
how do we get there, and
Hmm.
you need to kind of design it ground up.
Wow.
So I think today that is the biggest challenge, even with bank accounts, right?
True.
Current accounts cannot be on, let's say, either account aggregator and stuff like that, and other protocols as well, because there are two logins, right?
True.
So you get consent.
True.
It's tricky. So
Yeah.
the more you get into it, the more you realize that, okay, it's actually a structural issue that you need to solve.
True.
So something needs to give. Something needs to give, either in the way we look at, okay, you know what, it's okay if one director approves it, we consider, or if there are two, one is good enough.
Mhm.
If there are three, two is good enough. You need to figure out that formula
Yep.
and stick with it and go forward.
Naturally. This is actually very cool though, because a lot of the customers that we speak to today invariably also ask in the credit product that we sell, right? Like, so we sell a bunch of products. The credit product end up asking, would you also do the KYCs for the businesses, and how would you happen to do that, right? And it also, which is also like very tricky, right? Because none of the KYC providers in the India stack today actually have a very straightforward solution to this.
Hmm.
Speaking of which, right? I did sort of see when I came back to India the three layers of India stack. The
Okay.
KYC layer is actually very exciting. Many players in it. Decentro is probably one of the top ones in that. And it so happened that post the KYC layer in India came about the payments layer, right? Which
Yeah.
also you happen to sort of enter
Yes.
into
Yeah.
that space. Why jump into the payments layer when actually horizontally you could have expanded in the KYC layer itself globally, right? What's so exciting about the payments layer that sort of you thought that, hey, rationally speaking, because also there were many more players in the payments layer in India, right? And many of them were extremely competitive, and I would assume payments
Yeah.
is a very, very hard game to sort of get into, right? So what is so exciting about the payments layer that you realize, hey, this is also something that we can sort of build upon?
So I think, look, we started looking at payments right at the start.
Oh wow, okay,
Right. So for us, payments was, because look, payments is where a lot of the business lies.
sure.
At the end of the day, a KYC is a one-time thing.
Hmm.
You're onboarding the customer. You need to do a bunch of KYC checks. You're doing it.
Sure,
Payments is where you get recurring business.
sure.
That is point number one. Point number two, unfortunately, there is no global identity framework that's available. So
Hmm.
every country has its own versions of its documents, which makes it very hard to integrate, because not every country has the digital infrastructure to enable something like what Aadhaar has done.
Sure.
So you would realize that when you look at, okay, you know what, let's go to Singapore,
Hmm.
there's a different set of IDs you need to verify there. If you were to just cross 10 kilometers from Singapore and land up in Malaysia, it's completely different.
In fact, even the
So,
NRI have a different identities altogether in India, right,
yeah,
for the KYCs.
yeah, exactly, right. So, I mean,
Right.
it's that's a pain point in itself, where a lot of companies have come to us and asked us, hey, how can we simplify NRI KYC?
NRI KYCs, naturally.
So, I mean, and there was a very, very, very interesting conversation that I had with a gentleman called Movin. He runs this company called Skydo,
Sure,
and he's into international remittances and money movement from country A to country B.
sure.
So I asked him, dude, do you, like, when you see the UPI being so simple in India, does it frustrate you
Yeah,
that cross-border payments is so complex?
true.
And he said, Ronak, it did at the start, but then he realized that every country has its own regulatory scene and it's evolved over time to suit their needs.
That's true.
And it's not rational to expect that all countries would have something which is very seamless and very easy to work with. And I think that line is very relevant when it comes to KYC as well. You look at the US, they've got the social security, which has become synonymous with their identities, right? And when you look at it from India, it seems really cool. I'm sure they've got their own set of challenges as well. But sometimes when you look at it, it's like, wow, what if we had something like that in India?
True.
And then there are companies which look at India and be like, wow, what if we had something like Aadhaar, right? So
Sure.
you'll realize that it's just not easy. And then when you decide to pick up which market, it's very difficult to identify which market to go to.
Sure.
And that market has to be big enough. You have to have enough space in it to do something. It's a foreign market, so you really need to understand the dynamics of that market. So there are a ton of factors that play along with this international expansion piece. So I believe it's good to build multiple products and offer this set of or bouquet of services to your customers, because they will pick it up as long as they trust you. So that's where the cross-sell angle comes in, and it plays out really well. So
Sure.
the payments product could become the hook to get you on board,
Sure.
and you could end up consuming KYC at a later stage,
Got it.
or maybe vice versa. Right?
Interesting.
So the more products you build to serve your existing user base, your distribution is sorted. You don't have to figure out about distribution, and that makes life easy, man. Because I've realized one thing in business, distribution is probably the most important thing.
Yeah, that's true. It's probably the biggest moat. And I'm curious. So when you say payments, right? Let's talk about what kind of payments you mean, because let's break down payments as we broke down KYC now, right? So
Sure.
we have understood KYCs exist in different kinds. Sort of the plain eKYC, then CKYC, VKYC, and so on and so forth. In payments, what are different kinds of payments that are there? Because I would assume the initial payments that existed in India are NEFT, RTA, RTGS, IMPS, and then UPI. What is that Decentro does in terms of payments? And then let's talk about how different that this payments is from the other payment stacks that exist in India.
Sure. So I think, look, I can look back to pretty much my entire adult life, right? So since the time I turned 18 and I started banking, I had my own thing. Money transfer was basically NEFT and RTGS.
Yep.
And it was not instant.
And NEFT and RTGS, you could only do from a bank. Those were their electronic payments that existed in India, and this was like, say, pre 2010 or so, right?
Yeah. I mean, 2010. I mean, look, I've been doing transactions from the year of 2012 or so, right?
Sure.
So
got it.
Probably best to start from there. But I do remember the checks era, right?
Sure.
So first we had checks being presented, "Arey, sign karke dete hai."
Sure.
Then came along CTS, which kind of added a layer of security to these checks transactions. But yeah, I think earlier days, people used to either withdraw money, cash from the bank and go and pay in cash, or there were DDs, demand drafts. I still remember paying my college fees in DD, and I was like, why, right? Because I remember the process. You have to first go and fill a form in the bank. Say that, hey, I want to pay. I need to pay. So first, the college would give me a challan. I had to take that and go to the bank and be like, I need to pay my college fee.
Sure.
And then I had to fill a form at the bank. And then give it to them. And then I think they would check the balance and like, hai ki nahi paisa. And then they would print a check kind of a form.
True.
But it would be printed with a layer of plastic on top of it. And then you go to the college and give it, and then they would present it and get it. It's so complex for absolutely no reason, right?
True.
Then came along, probably, we all started using checks and other transactions. And then NEFT and RTGS came along, right? Which was digital bank-to-bank transfer.
True.
But none of it was real time. There was always a lag. There was a 30-minute lag or 1 hour lag. It didn't work sometimes on bank holidays. So if you had to give somebody money, you have to come up on a bank working day, and that's when it could happen.
True.
And then came along IMPS, and I remember testing IMPS in, I think, if I'm not wrong, 2013. And it was instant.
Yeah.
4 second mein the other person gets a message ki credited, right? Money is in your bank.
True.
In essence, the money did not move
Yeah.
from my bank account to their account. It was
Yeah.
just a ledger entry that was done in real time,
Yeah.
right? And the banks used to settle the money at the end of the day, so
That's
they
true.
would net off
Yeah.
the payment and settle it. So it's interesting that they came up with IMPS and then they were like, wow, this is mind blowing because
Yeah.
it's so fast
Yeah.
and it's easy.
Yeah.
Let's roll this out. And when they realized that, okay, probably the friction in
Yeah.
IMPS is account number sharing and IFSC code sharing.
True.
And they were like, okay, is it 4 zeros or 5 zeros or 6 zeros? Because banks don't print zeros or the numbers in a big font, right?
True.
Like a lot of manual error entering 16-digit numbers, 18-digit numbers. And IFSC codes were confusing.
Yeah.
And also there was a hack. There are a couple of things that I'll tell you, which I'm sure a lot of your listeners, because they're all fintech savants, will know already. But if let's say you're transferring money to me and I have a bank account in HDFC, if you put HDFC 00000001, in most cases the money would still come to me because the account number is unique any which ways, right? It's not linked to the branch. So if you got the IFSC code wrong, in probably 80-90% of the cases, it didn't matter. The other thing, when you're making card payments, even to this date, you're asked to enter the name on the card.
True.
Nobody is sitting and checking it, yaar.
Naturally.
I mean, yeah, I enter Iron Man kabhi, right? And it still goes through. Like, you just do it to get some kicks. But I mean, coming back to serious talk, people realize that, okay, you know what? The biggest challenge that people are facing with IMPS transactions is getting the account number and IFSC code right. So let's build a layer that abstracts all of this and becomes a proxy to your account number so that people don't have to enter account numbers every time and they're able to make payments seamlessly on the IMPS protocol. And that's how we got UPI.
Sure.
Right. So I think it ended up being the biggest game changer in peer-to-peer payments, I think, of probably this, if I were to kind of put my neck on the line, century.
Yeah.
Right?
Yeah.
But at least, the very least, the next 20-30 years.
For sure.
Because, I mean, look, UPI has made it so simple to pay anybody that any disruption on top of this is not going to give you a huge delta, right?
True.
So I mean, the kind of work they've done is fantastic. I used this line on another podcast that I was on earlier in the day, and it somehow makes a lot of sense to me. So all of these things that we've spoken about, right? Aadhaar, UPI, all of this is possible because of a few factors and because of a few visionary people. So I call these people the gods who did the Samudra Manthan. So they went in and they did Samudra Manthan and we got all of these boons from these folks. Like, we've got UIDI, Nandan Nilekani has contributed a lot. And the vision that they have, iSpirit. Who can forget Mukesh Ambani and Jio, right? Because you and I are sitting here today because people have internet access in India and we are able to access this big market. People are earning more money and smartphones have become affordable, so they're able to pick up a smartphone today. So it's just amazing to sit back and think about UPI has been there only for 9 years.
Yeah.
Right.
True.
And you look at the kind of transactions that are going on UPI. I pay like 2 rupees on UPI.
True.
Right. If I have to literally pay when I go to the temple, I have to drop off my footwear outside. I pay 2 rupees to the guy on UPI now.
True.
So that is the state of payments in India today.
Yeah.
It's beautiful, and we are extremely lucky to be part of this set of companies doing things around payments in India.
Kind of we're spoiled for UPI, right? Like it feels like payments elsewhere. It seems so. When I was in China or even in Singapore and the US, it never felt so seamless, and it seems like in India I'm just spoiled for UPI.
Yeah.
When I initially came in, I used to check, like how we used to put that 1 rupee and see if it actually goes into that account. I initially did that with UPI more
Yeah,
often than
yeah,
not to actually check, hey, if it actually goes into that account. If it doesn't, because it's super scary, because you just put
yeah,
random numbers and money goes through to people, right?
yeah.
I'm curious, because we know that some of the biggest companies in India in fintech that are unicorn and plus plus, right? Like let's say from the legacy companies like BillDesk, who essentially sort of helped us in doing payments on the internet, and then the POS ones that they had, Pine Labs and to Razorpays and many more, right? Legacy companies that exist in India. I'm curious, what is the stack in terms of infra that Decentro has to offer
Sure.
as
Yeah,
compared to, say, any other sort of stack that exists in payments, right? Because payments is a very vast space. There is peer to peer, there is peer to merchant, there is your e-commerce transactions, your POS transaction. Let's break it up and see what are the payments that exist and what does Decentro do.
yeah. Actually, I'm very glad you asked this question because for the layman, payments is payments. It
Yeah,
doesn't matter,
true.
right?
Naturally.
But so many. There's such a interweb of money movement that's happening in India today that we need to have a lot of these complexities to solve for this.
Sure.
So yeah, let's pick up. Let's go probably A to Z.
Sure.
You first have a B2B or a P2B payment.
Yeah.
So this is a person or a business paying, or person paying a business.
True.
What is this transaction? You go to PVR. You're buying 2 movie tickets. It's, let's say you're in Chennai, right? So
Yeah.
$200. I
Sure.
can't say the same.
Sure.
My
Naturally.
popcorn costs more than that. So you're paying $200 to PVR, and you scan their QR code and you pay. That's a P2B,
Sure.
right? Because the money is moving from your savings bank account to a merchant
True.
or a business.
Yeah.
And then let's say you and I are watching that movie together, Shreyans. You
Hmm.
pay 200 and I need to pay you my share of it, which is 100 rupees.
Hmm.
I take your UPI and I pay you.
Hmm.
That is a peer-to-peer transaction.
Sure.
Um, let's kind of stay here for a minute and not get kind of too complicated. So right now
Hmm.
we're looking at UPI transactions. Then let's say after watching the movie, we go shopping, and I end up buying, let's say, a laptop bag,
Hmm.
and it's 4,000 rupees, and I pay using my credit card.
Sure.
So this is an offline credit card transaction which runs on the networks, right?
Hmm.
So there are Visa, Mastercard, RuPay, Amex, Diners, all of these networks that have this offer.
Sure.
Yeah, and I mean cards typically, right? So
Sure.
cards are enabling payments between either a debit or a credit account
Hmm.
to a merchant,
Sure.
because I cannot accept a credit card payment from you,
Hmm.
right? So
Sure.
the infrastructure for that is different.
Hmm.
So if you look at the payments landscape in India today, there's cash,
Hmm.
there's UPI, there's debit card, there's credit card, and then there are other credit instruments like a
Hmm.
buy now pay later.
Yeah.
And within cards, there's a third segment of which is prepaid cards,
Sure.
right? So when we as Decentro looked at this entire stack, we realized that cards have been around for decades now.
Yeah.
Right? It's more or less a solved problem,
Sure.
and there's a reason it's expensive, because
Yeah.
there are n number of intermediaries who are involved in the transaction. So again, it's very interesting. I'll take about 45 seconds to explain.
Yeah.
I have a bank account with HDFC,
Hmm.
and let's take a debit card that I'm using to pay,
Sure.
right? So it's let's say a debit card with Master.
Hmm.
I go to Aldo and I'm buying something, and Aldo is using a card swiping machine which is known as an EDC machine,
Yeah.
which is
Or the
probably powered
POS.
by Kotak. Yeah,
Or the
pause,
POS.
right?
Yeah.
Yeah. So it's powered by Kotak.
Hmm.
Now, how does my swiping of the card send money from HDFC to Kotak? There
Hmm.
is a network in between. So this could be a Visa,
Yeah.
right? So what happens is there's an acquiring leg and an issuing leg. So
Yeah.
my bank, which is HDFC, from where the money is going,
Hmm.
becomes the issuing bank, and
Yeah.
Kotak becomes the acquiring bank.
Naturally.
because they're pulling the money. So
Yeah.
what's happening here is the EDC machine is punched in, right? First it
Yeah.
says, hey, I want to collect 500 rupees.
Yeah.
So when I present the card has certain details that identify me.
Hmm.
That details is picked up by the machine and sent to Visa,
Yeah.
right? Visa, because the acquiring the POS machine or the EDC machine power is connected to Visa.
Hmm.
Visa then realizes that, hey, this is a HDFC bin, so we need to talk to HDFC. So they ping HDFC with my details saying, does this account have 500 rupees?
Yeah.
HDFC responds saying yes,
Hmm.
and it authorizes the transaction.
Basically, does the maker checker with it,
Yeah,
right?
right.
Yeah.
And then once that auth is done,
Hmm.
Visa goes to Kotak and says, "Mil gaya."
Yeah.
And then Kotak says, "ठीक है यार, chalo, let's go."
True.
And the whole transaction is complete. So there's now there is a switch involved.
Yeah.
Now, what does a switch mean, right? Switch is the layer or the technology that helps HDFC Bank to connect or communicate with Visa,
Hmm.
because it's not so straightforward to integrate into Visa or a
True.
Master or any network for that matter, right?
Yeah.
You as a bank can't have so many integrations, so you have the switch.
Yeah.
So essentially in this play now, Visa connects or pings HDFC via the switch.
True.
So there's a switch on the acquiring side, there's a switch on the issuing side.
Yeah.
Now, so and my card is powered by Master.
True.
So just look at the complexity of this web, right?
Yeah.
Everybody has to make money in this transaction.
Yeah.
So that's why the cost of charging money on a debit card or a credit card is higher.
True. Naturally.
But then when we came up with UPI, we said, okay, you know what? It's peer-to-peer. We don't need so many participants in this place. Let's simplify it.
Hmm.
And that simplification has helped us to reduce the cost on UPI.
Hmm.
So in UPI, NPCI is the one who plays the role of the network.
Yeah.
NPCI is a homegrown consortium of multiple banks. So essentially, it's completely homegrown.
True.
And then there's an issuing and an acquiring leg in UPI as well. And then there are switches as well. But then the government has said, "Yaar, we need to promote digital payments, so all of you don't earn money."
Yeah.
So some of the people are lucky enough to have payments flowing through debit cards and credit cards and wallets where they're able to collect some money.
Hmm.
The reason Decentro decided to get into this was we realized there's an inflection happening.
Just a second. So Decentro got into the switch layer of UPI. Is that
No.
right? No, not in the switch layer.
We are only playing on the acquiring side of the business.
Got it. Okay. Cool.
Right?
So basically, your acquiring side of business, you mean like if there is a customer who, the merchant side, where essentially you'll help the merchants get the money once a business sort of ends up paying, or once the user or the consumer sort of ends up paying by UPI of sorts, right?
Yes.
Got it. Okay, let's go. So you're on the acquiring side of business, and then what does Decentro do beyond that, on top of this?
Sure.
Yeah, so we were actually discussing, right at that sort of break, we were discussing as to that Decentro was in the acquiring side of payments, right?
Yes, yeah.
And that's actually very complex to understand. What do you mean by acquiring side of payments, and what type of payments is this?
Sure. So an acquirer is an entity that operates on behalf of a merchant who wishes to collect money.
Yeah.
So in the very basic meaning, it's just like I am acquiring payments for you, right?
Sure.
So let's go back to the PVR or the Aldo example that we used.
Sure.
When you look at the example that I gave in Aldo, where there's the EDC machine which is connected to Kotak, Kotak there is the banker who's collecting money for Aldo and giving it to them.
Sure.
So that person becomes, or that entity becomes, the acquirer.
Sure.
So if you are, let's say, booking flight tickets on Make My Trip and you see a company like Razorpay, who's operating the payment gateway, Razorpay there is the acquirer.
Sure.
Razorpay will be working with a couple of banks in the backend to power this.
Yep.
So essentially, at Decentro, we work with a lot of merchants who want to collect money from their customers. So they work with us and they integrate with our API stack to be able to collect money from their customers, and we settle it to them.
Sure.
So that is the crux of the business, right?
Sure.
Now, as an entity, we have taken a call not to do card based payments and
Mhm.
not to build a payment gateway in the colloquial sense of the term that consumers tend to use it in,
Mhm.
right?
Sure.
And the reason was actually fairly simple.
Mhm.
If you look at the data over the last few years, you will realize that there's an there's a it's a egg-shaped graph, right? So
Mhm.
card payments have been on a steady decline,
Sure.
and UPI has been picking up.
Sure.
The other thing is the infrastructure that is needed to collect UPI payments is very minimal. You don't even need a device, right?
Sure.
You just need a QR code that is stuck, pasted, and you're good. You'll
Yeah.
keep receiving money.
Yep.
Whereas the infrastructure that is needed to collect card payments is quite significant. It is costly.
Yep.
And if you're looking at what infrastructure can penetrate the depth and breadth of India, where even if you're in a village where you're operating a chai tapri where there's probably no power for 3 hours a day,
Yep.
I know that that situation does not happen in India anymore, but
Sure.
let's assume, right? Let's
Yep.
play worst case scenario.
Yep.
UPI still works because you
Yep.
don't need to charge your device. It's actually brilliant. And if you look at you spoke about China a while back, right? China and VPay, WeChat,
Yep.
right, really paved the way for QR code based payments.
Yep.
Because I was speaking to a guy who had come in from China way back in 2017, and he was telling me that, and at that time it was mind blowing for me because in India UPI had just kickstarted,
Yeah.
right?
Yeah.
He told me that he had not visited an ATM in the last 3 years, and like he showed me some currency notes in his wallet. He said it's been lying in my wallet for 3 years. I have not had to pay
Sure.
cash anywhere, and I was like, wow, I was jealous
Sure.
because that is the kind of ecosystem I wish to live in, man.
Sure.
I hate carrying my wallet,
Absolutely.
right?
True.
Although like I want to carry 1 or 2 cards today,
Mhm.
that I'm still a card guy, um, but I hate carrying the wallet. I want
Absolutely.
to be able to walk out of the house without having to carry a wallet and have this bulky apparatus with you everywhere, right? So I think it was very clear that cards are on a decline.
Sure.
And what I see happening in the market over the next few years is essentially it'll dilute or sorry, not dilute, distill
Mhm.
to a very niche segment of users who are credit card users who would probably want to put all of their payments on the credit card.
Mhm.
But I see people, for example, we had a team dinner yesterday where one of my friends who ended up paying the bill of 25,000 rupees, he paid on UPI. And for me, it was like, dude, you're missing out on so many reward points. Ye kyun kar rahe ho yaar? Like,
True.
but that's the beauty about India.
Sure.
People have adopted to it and they're okay letting that money go from their bank account then and there.
Mhm.
And there are people who optimize for it.
True.
uh yeah, so it's up to, I mean, it's up to in each individual and their preferences, but
Sure.
card is definitely on the decline, right?
Sure.
So what we realized was it's bulky and clunky infrastructure to integrate with to accept card payments. The margins are thin,
Mhm.
the operational overheads are pretty high,
Yeah.
and it's a declining market.
Sure.
And to top it all, you are going to enter a market 5-6 years after Razorpay entered the market,
Mhm.
and they've solved most of their problems. You're always going to play the catch up game.
True.
And by the time you eventually catch up, card payments will decline to such a level that
True.
it's not a viable business anymore. So we said,
Absolutely.
okay, you know what? Let's just skip this entire leg,
Mhm.
and because we are a lean team, man.
Yeah.
Look, we wanted to build a team with as few members as possible without needing to really increase. We didn't want to go out and have a huge acquiring spree.
Yeah.
So we wanted to be able to sit, in and get things done as much as possible.
Mhm.
Um, and we wanted to kind of be market leaders.
Sure.
So I think that's where we decided that cool, UPI it is. And I'll tell you the advantages that we have, right? We are a UPI native company.
Mhm.
We are born into the UPI era.
Nice. Yep. Absolutely.
So we've literally, so it's like we are experts when it comes to UPI.
Mhm.
And the entire platform is designed around UPI. So it's a great experience
Mhm.
that we're able to deliver natively on UPI,
Mhm.
and we're able to go to the market much faster. And it also gives us the opportunity to handle the operations in a much lighter manner. So it's lighter operations for us, which makes sense. Um, Dynamics of the market is a funny thing, right? People tend to eat their words quite often
Yeah.
in the industry. So I mean, who knows? Maybe 2 years later, we might have a cards section. But at least as of today, given our current circumstances and given the size of the team that we are operating with, it does not seem like something that we'll be looking at doing in the next few months.
Sure. So, I mean, there's something interesting that you said, where you collect money, where you help merchants to collect money via UPI, right?
Yeah.
Which is also, if I go ask someone like a Bharat Pay today, will probably say the same, right? So, what is the sort of, how does Decentro help in the whole sort of, scenario that I do know Bharat Pay, and I'm sure our sort of listeners also do know, but most of the merchants have this Bharat Pay QR, and then you go scan that Bharat Pay QR. Likewise, say there are multiple other interoperable QRs that exist. But what does Decentro also do that is because of course you don't, I assume Decentro does not have their own QR that goes across merchants, or if they do, what else beyond that QR does Decentro sort of help on?
Sure. So, look, within UPI, right, there are two broad divisions. So, what you touched upon, the Bharat Pay QR code, the Paytm QR code, and Phone Pay and Google Pay, and there are a lot of these billion-dollar companies who are in the race to acquire merchants, exactly, right? Often that side of the business is the offline piece.
Yep.
So that means if you want to enter that market, you need to have the team to go out there all across India and acquire these merchants, do the KYC, do it the right way, verify that the shop is mapped to the correct owner, the correct settlement account, the correct merchant category code, because I mean, there's a thin line between selling probably textiles and clothing. And they might have a different MCC code, right? So you got to have all of that in the right manner. And ultimately, it's going to be a race where they'll be like, "अरे हाँ, मेरे पास Paytm का भी QR code है, Phone Pay का भी है, you're probably the 27th guy coming and giving me a QR code, right? So you got to be able to play that game. For that, you need to have deep pockets. So that's a game that we are not looking at playing right now. What we do is online UPI payments.
Nice.
So there are a couple of ways you can collect money online. One is the collect request, which you would have all seen. Typically, you go to pay somebody on Google Pay, you have two options, collect and pay, or request and pay, send money, whatever. That leg of sending a collect request can be triggered by an acquirer. So Decentro, as a payment aggregator, can send a collect request to you to collect money. There's another one, which is payment links. So you would have seen this. You would have seen when you're looking to, let's say you're placing an order on Swiggy, you see UPI, and below UPI, you'll see Google Pay, Phone Pay, Paytm. You'll see all of these different logos, and you click on it and it'll take you to that app. Or you would have seen within some apps, pay on UPI, you click on it and you get options of your UPI apps. So this in the industry is known as intent. Intent is basically a synonym for payment links.
Got it.
So the payment link is typically, there are two kinds, and essentially a QR code is a visual representation of a link. Right. So you would have seen two kinds of QR codes. जो दुकान में लगा हुआ है, you go and scan it. It gives you the UPI ID, it plugs in the name of the shop. But it asks you as the user to enter the amount you want to pay. And then there are QR codes that come up in Chai Point and all of these other modern trade outlets where they show you the ad, a dynamic QR code on a device. Those are basically dynamic payment links, wherein we also pass when I say we as an acquirer, we pass the amount that I want to collect from you. And there is also a memo that you can write, right? We pass that as well.
Nice.
So by doing this, you cannot change the amount of the transaction. Right. And every QR code is a new QR code which comes with its own tracking. So when you make the payment, the merchant is able to receive a callback, or in simple terms, they're able to receive a notification that, hey, we have received this money. So you would have seen The QR code is on the screen only till you make the payment, and the minute the payment is successful, it says, "Great, payment done. Let's move."
Yep.
Right?
Yep.
So that is dynamic. So essentially, we do collect requests, we do payment links, we do dynamic and static payment links.
Sure. Very cool.
Right? So
Very cool.
and QR codes. The advantage with this is it's super easy to integrate. It gives the options to the customer as to how they want to do it. It's quick. You get the notification in a matter of seconds.
Sure.
And it's great for everybody. So
Sure.
yeah, that's what it is.
And how does the business around payment links work, right? Like, or say, with your dynamic links, the payment links, or the merchant sort of QR that you just explained about. How does it work? Does it work on transaction basis, or does it work in, like, say, month-on-month subscription basis? And how do you sort of make money in this process?
Yeah, sure. So it varies company to company.
Sure.
So there are companies who have a different mix of payment methods that they support. So for those companies that have multiple payment options, which allow them to monetize, and for a customer that has enough volume across the month, they say, "ठीक है यार, UPI free में ले लो," right? It's take it. However, there is a cost. There is a cost to effectively make this UPI payment. If you read the news in the year 2023, NPCI, who's at the center of UPI, I think they made a profit, if I'm not wrong, of 700 odd crores.
Yeah.
This money is coming from the switching that they're doing for UPI and RuPay cards.
Sure.
Right. So there is a cost. So the banks pay NPCI for every UPI transaction. So that cost has to get kind of borne by somebody. Now, a lot of entities are passing on the cost back to the merchants. So in online collections and online payments, the cost is being passed on to the merchants. And that's a transaction-based fee model where payment aggregators like ours make money. So yeah, it boils down to every merchant that you onboard, the number of transactions that they do, and what you can charge on that. Yeah. Yep. I thought it was something with my network. Okay. Okay. Oh, cool. Yeah. Yeah. Actually, yeah, good that you asked me. Let me just refresh payment gateway. Aggregator. Yes. Yeah. Yes. No. Both PA and PG came together. Like the license came together. Yeah. Yeah. Yes. Yeah. 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 So this is a very interesting and very nuanced question and answer. So let's address this. Let me address this way, right? So payment gateway. If you were to go to any random person on the road, or okay, let's not say random person on the road. If you were to go and ask any merchant, right, they would say, "Ha, yaar," like you said, a BillDesk, a PayU, a RazorPay, all of these guys are payment gateways. So what what happened was, until the year 2020, when the payment aggregator, payment gateway license kind of was thought about, there were the term payment aggregator was not broadly used, right? So any company, a tech company that went ahead, did partnered with a bank, and through the bank partnered with, let's say, a Visa or a Mastercard, to access the network to be able to acquire card-based payments, ended up calling themselves as a payment gateway, right? So it was a tech play, it was a software play, wherein it was a software a solution or a service offered to merchants to collect money. The actual handling of the money was done by the bank, right? And the bank used to settle to the merchant. So these guys were just handling the tech layer. But and at that time, all of these payment gateways had their own nodal accounts with the bank, where the bank would give the money to that nodal account, and from that nodal account they would settle to the merchants. Then regulation came up, because during this whole wave of 2014 to, or payment gateways existed way before that. Payment gateways existed as early as 2005, 6, 7. When Flipkart started, they already had payment gateways. So that whole era, payment gateways were known as these players, the bill desks and the CC avenues, and there are a lot of companies doing this early in the day. So they just kept getting called as payment gateways, and that name stuck. Then when RBI said that, yeah, there are a lot of these technology companies handling money, they are collecting funds, they are aggregating funds for merchants, and they're giving the funds. We need to regulate them. They came up with broadly two classifications. One was payment aggregator and one was payment gateway. So if you go by RBI's definition, right, a payment aggregator is any entity that collects payments on behalf of multiple merchants, and also that may have multiple modes of payments that they collect, or that they are acquiring for. Exactly. Yeah. Right. And they settle it to the merchant. So if you were to kind of distill this down to the basic, any entity that is handling funds on behalf of a third party was called a payment aggregator. So that's how all of these entities who were calling themselves as payment gateways before the regulation became a payment aggregator. Yes, modes. Exactly, right? Then I was like, okay, when this whole thing came out of PAPG, I was scratching my head. I was like, "Yeah, all of these guys are payment gateways. Why is RBI calling them a payment aggregator, right?" And then I understood that the the regulation is actually more, it's deeper. It's not limited to just this layer. It's actually going across the entire supply chain, if I were to call it that, or the value chain in payments. Because this layer of the payment aggregator is just the front, right? Now, there are technologies that connect the banks, um, and that are operating in the back end to enable payments to happen, without which a payment aggregator on the front can't do much. This is the technology that the banks use. So this could be the switch, this could be any other in technology that the banks are using to enable this method of payment collection. So RBI called them as payment gateways. The difference here is that they are at the technology layer, they don't touch the funds, whereas the payment aggregator touches the funds, right? So if I were to go and provide switch to the bank, it could be like the gateway. So I am the gateway that connects the bank and the networks. and the merchants. So I am a payment gateway, whereas the payment aggregator is a layer on top of all of this. So that is essentially the difference between payment aggregator and payment gateway. Yeah, yeah, yeah. Right, right. Okay. Mm-hmm. Yes. I think digitization is here to stay. And if you were to look at which direction the world is headed in, it's only going to get more and more digital. Think of right from, like, for example, in the month of December, there's going to be a driverless metro running in Bangalore, right? To land records being digitized, to your ownership of multiple assets being digitized. There are states which are putting up their land ownership records on the blockchain. RTOs are getting digitized. You name it, and there is a digitization effort going on in across the length and breadth of the country and the world. In this flow, right? If you to look at it, the natural and the logical next step is to be able to digitize a lot of the other infrastructure that enables this. Like you mentioned, KYC has been digitized today. Payments have been digitized. Now, a huge market in India is lending, and people need loans to buy a house. People need loans to, some of them need loans to pay their school fees for the kids, lifestyle related loans, uh, loans to buy an asset, loans to finance a lot of other things in terms of businesses. So, and the prevalence of loans has become very high. So people are able to get, if you go to an Apple store and you want to buy an iPhone worth 75,000 rupees, you can literally walk out of the store in 30 minutes with a loan granted to you, right? And that's mind blowing. At the same time, if you were to go and apply for a home loan, that's going to take you, I don't know what, 1 week, 10 days. Hana. So, I mean, it's skewed. So when you look at the infra, you need services like what you're building, and it's very difficult to build in this space, right? Because you're dealing with yet to be digitized spaces and asset classes. So I think over the next, and you have to take a really long term view of this, right? Over the next 30 years, everything is going to be digital, and you're set in pole position to be able to securitize a lot of the assets in the world and help and be the gateway for institutions to securitize assets for them to grow their businesses. So I think, definitely, in terms of complex problems to be solved, KYC is largely a solved problem. Payments is largely a solved problem. lending is also solved in a way, at least consumer lending, right? It's all a game of how do you scale this up now. But you are solving the problem as we speak of how do you securitize these assets, which puts you in a very enviable position in the market. Yeah. Mm-hmm. Yeah. 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 No, absolutely. It's been a while since I've had to kind of break this down. So typically, when we hire newbies in fintech at Decentro, a lot of this is typical training material for them. So I think the good part out of this is I can just point them to this podcast going forward. So no, absolutely, it's my pleasure, Shreyans, and always fun to catch up with you, man.